Hey everyone, it is Evan here from the Trade Risk on Friday, November 29th, here with a weekend market recap video. We're going to keep things a little bit short in this week's video. We had, of course, a half day here on Friday. Hope everybody had a wonderful Thanksgiving. Markets were constructive this week, gave a little bit back on Friday. The big story was the Russell 2000. That's what we're going to focus on in this video and just touch on some of the other happenings. Let's jump into it here with our dashboard. You can see we did give some gains back here on Friday. This was not only Friday to close out the shortened week, but it was also the final trading session of November. So Monday, we will officially kick off the last month of the trading year, December, and we'll see if markets can continue to hold on to the year-to-date gains of 2019. So we did pull back here on Friday, still strong 5-day change numbers. We're still above all the simple moving averages, or the key ones anyway, the big ones, in the major indices. And if we scroll down and look at sectors here, you can see biotech still at the top of the list, really taking charge right now. At the bottom of the list is energy, negative here on the day, and certainly had a tough session on Friday. When we look at some of the major markets, we got the SPY right at the top of the list, and on the downside, we see commodities, natural gas and oil, both sitting down here at the bottom of the list. So let's jump into the charts. Let's take a quick look here first at the weekly chart of the S&P 500. This is the cash market weekly time frame here. You can see last week's video, last market recap video we did on Friday, we talked about the pause here, sort of the inside looking week here. Wasn't exactly one, but it was certainly a pause in the action. And that, of course, didn't last long because we came right out of the gate this week, pushing to the upside, pushing to new all-time highs in the S&P 500. And you can see basically where we closed here, up 1% on the week. It was a fade off of the highs, but certainly still some strong progress in this uptrend here. We have no overhead supply above us except for Thursday's action there, but there's basically no weekly overhead supply. We are quite extended in the short term, but we've been talking about this extension in the short term now for seems like forever, but it's been about 5 or so weeks that the market has been stretched to the upside. It has been in that quote unquote overbought territory, but that is seeming like a new normal in this market regime here as the market trends to these new all-time highs. So yes, we are stretched in the short term. We've got some weakness here on Friday. We'll see if the sellers can get any follow-through on Monday. You can see this is what the daily chart of the S&P 500 looks like. This was last week where we had this brief pullback. We started off the beginning of this week with this strong surge to the upside. We followed through, and then started to pull back here on Friday. So again, heading into next week now, we can see if sellers are going to make any more of this pullback. We do have last week's lows here would be a reasonable kind of upper level support to pay attention to now going forward, which is just under that 3,100 level, which is approximately about 1.5% from where we're currently trading. So that's what I'd pay attention to there in the near term, is just to see if we do get more continuation to the downside early next week. Let's see how far we get. 3,100, that's the first kind of spot there to sort of take notice. Now, the big story this week, I think, was the Russell 2000. Let's go to a weekly chart here of the Russell 2000, clean it up a little bit, and you can see this is the highest weekly close that we've seen going all the way back to would be this week right in here. So this would be October of 2018 was the last time we were up around these levels. Nearly September, we were closing up around 161. Of course, back here we were in kind of a free fall to the downside. Now, after rebounding early this year, chugging sideways for about 9 months in this sideways range, 10 months in this sideways range, we're now starting to lift back up here. MACD has some nice advancement and momentum at its back here as price lifts higher. Momentum MACD is lifting higher there. That is a constructive sign. When we throw back on all these messy lines, you can see again this 160 level was the area to pay attention to. It was the top end of the range where this market repeatedly failed, and we now saw a swift move above it. Now, we did get a little bit of a pullback here on Friday, so again, same comments apply. We'll see if we can get, or if we get some more follow through to the downside next week. But for now, going forward here on the Russell 2000, 2000, which is in a potential kind of state here to act as maybe a leadership group, holding above this breakout area, call it 159 to 160. I think that's going to be important here for the market. If it can continue to hold above there, firm up, and continue to run, then we have a nice new fresh kind of breakout leadership group for the market heading into year end, which might keep any severe pullbacks on the horizon and not really happening just yet, so long as the Russell can continue to operate here and chug up and chug higher. So that is kind of the big story here today. Is let's pay attention to the Russell as it breaks out from through some significant resistance. We'll see if that momentum can persist, and if so, we'll look for small caps to perhaps take the lead here into this next market stretch. Finally, if we look at the NASDAQ 100, you can see this looks very similar to the S&P 500, closing just off of its all-time highs. Again, short-term is quite extended here, as it has been throughout this entire run-up over the past month. But again, if that's the new normal here, then the market is just kind of continuing in this nice uptrend with bulls firmly in control. So that's the scoop there on the market. It was a short week, but buyers still getting the job done, closing strongly. Little bit of a pullback here into the end of the week, maybe makes the collective here nervous and gets the bears again all excited, while the dominant trend still remains higher. So let's jump into some other major markets quickly. We'll go to the TLT next, which did finish higher here on the week, trying to go for the third close higher in a row here for the weekly basis. This closed up 0.37%, a little bit off of its highs, but still trying to work itself back up into the prior range here over the past couple of months. If we look at gold also stabilized, had a rough start to the week, but then it kind of collected itself. It closed up just slightly here on the week. It does also look like it's trying to kind of bottom out here or find some support in this 137 area. So far, so good. Longer term, still in this broader sort of consolidation here, this pullback, this channel, if you will, going back to mid-August, that is. Silver here, pretty much the same look. Did start off the week red, rebounded, trying to hold in around this 1590 area. Again, trying to get back up and stabilize here as it's been moving sideways for the past few months. Now, energy, I think, is sort of the other big story here. Is USO pretty abruptly here on Friday started to really see a swift move lower here, 4% to the downside to finish out the week, and right back to kind of the lower end of this maybe trend line of support, this lows here that kind of were established in early October. If we go down to a daily chart now, you can see just a expansion in range, heavy volume, kind of thrusting off of this level up here, this $12 level, which is where a lot of supply is. This to me looks like what could be the start to a downdraft here in USO. This looks a little bit urgent here on the move lower, and I wouldn't be surprised to see follow through. I have no position here. I'm not shorting it, but if I just look at this from classical technical analysis perspective here, I would think that sellers would kind of jump in on this and expect them to kind of get more follow through here. Again, if they don't, maybe that's a signal in itself, but USO looks to be in trouble based on Friday's move. Natural gas also speaking to that same claim here. You can see down 7%, huge move for natural gas as this has been trying to stabilize in here. It's been certainly volatile and certainly large swings in here since the start of August. I mean, we've been moving up and down at 30% clips. From the lows of August to the highs of September was a 30% swing. Then we had a 20% swing that followed to the downside. Then we had a 21% swing that followed to the upside. And now here we are again with a 21% swing back to the downside. So it's been all over the place. If you've been able to take advantage of the volatility, congratulations. Some great moves there, some great directional swings there, but as it stands right now, certainly extended in the short term, I would say, but closing at new year-to-date lows here for natural gas, undercutting the August supply here. So, if that continues to persist, if there's no immediate turnaround here, then I'd be very careful and cautious here as momentum builds to the downside. Look at the volume coming in as well for natural gas. So big stories today, Russell 2000, and then also I think energy here towards the end of the week, also a pretty interesting story here as USO natural gas starting to unwind and break through some technical support. So that's what I got here for the Thanksgiving week. Hopefully everybody had a great time this week, enjoyed some time off of markets. Enjoy the weekend. We'll be back here on Tuesday of next week with our midweek video. Thanks so much as always for tuning in, for being a subscriber, for following along in the videos. Have a great weekend. We'll see you in the next one.